Good afternoon, everybody. It's Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments for June 4th. Well, this will go down in the history books, right? We got the screw worm announcement. We were sharply lower at one point, and then we were $3 higher. We finished the day. If you look at feeder cattle, we opened up at 336.70. The low was 335.90. So we broke, and then we finished the day at 353. Pretty much $20 off the low. So the initial, this was a deal where they sold the rumor, then bought the fact. And that was pretty interesting. We'll see how we get through the rest of the week. But the New World screw worm is in Texas, and now we're going to see, are we going to be beaten over the head with it on the national media? Right now, it's probably long-term it is probably friendly for feeder cattle, because if this becomes a problem where they have to eliminate some animals, it's only going to make supply tighter. Okie dokie, Smokey. You got to talk about the grains. Dees corn down 8 cents at 451 3/4. July corn hit 421.5. A new contract low, settled at 24.5. If you're not getting my letter, if you're not following me on social media, I did post that long-term continuation chart. There is potentially 35 more cents worth of risk if corn keeps falling out of bed here, just on the charts. We'll see if that happens or not. Dees corn, it's hard to believe that, and we've had such a horrendous sell-off here. I'm really not a whole lot. Just mostly fun liquidation, follow-through selling there. November soybeans were the big surprise. We had been holding in there really, really well. Even last week we were trading $11.90, close to $12. We just completely fell out of bed today, hit 11.34 3/4. Why is that important? Well, again, if you're following my letter, you know that I do all the retracements every day, every week. I'm always on top of them. You take the low for the year, 10.55, and you take the high of the year at 12.14. 11.34 was halfway back, and we've been here before, sports fans. We were here on April 8th after that USDA report. And so very, very big support here, 11.34 in the beans. I'm not calling a low. We could absolutely positively continue to go lower. The rumor was that the tariff issues might give China a reason to walk away. I don't know. I've been doing this for 35 years. I've never known China to buy the highs. So we will see if it turns out that, we break a little bit more and then they step in and buy. Would that be surprising? No, not really. I mean, if you and I had 1 billion bushels of beans to buy, would you really want to be buying it at $12 when there's a chance you could buy it at $11.30 or $11.15? So keep a long-term perspective. This is why we hedge. I had some very cheap $11.80, $11.90 puts on that we didn't think we were going to need, that have really helped us here on this downdraft. So on that note, same thing sort of happened in wheat as well. Wheat, a lot of technical damage there as well. Traded down 5.5 cents, settled at 581 3/4. The low was 79 1/4. Again, we had a tremendous rally, right, from 525 to 688. And I'm just looking at, Chicago, soft red winter. Technically, a lot of damage done on the chart, but we are hovering right at the 62%. 588, we did settle at 582, but it's the area that I'm watching, and that is a 62% retracement of the entire rally from 525 to 688. You can go back to, remember April 10th, after that USDA report where they just, destroyed wheat, and then 2 days later we were off to the races. Well, we came right back down to that old low at 577 3/4. Today's low was 579. We will see if that holds. If you're a bottom fisher, that's a wake-up call. If you've got puts on, roll them down. The way this market has been moving this year, anything can change us. I am not calling a bottom, so I'm not one of those guys that says you don't need your puts now. It's all behind us. Keep a cheap put underneath any unpriced bushels. But if you sold up there, and we had some good sales up there north of 660, 670, if you're interested in re-owning those, you might want to re-own them for the next two reports. We do have a USDA a week from today, but the big one, the big enchilada, is going to be the June 30th acres report. And I'm just going to wrap it up talking about 2012 again. 2012 corn fell to about an 18-month low, and then that June acres report turned us. Now, is that going to happen again? I have no idea. I am not the amazing Karnak. I am not a psychic individual. But the next 3 weeks, I got a lot of risk and also a lot of potential reward. So on that note, I hope you had some hedges done. I hope you had some cash forward sales done when we had that rally. It was a real gift that we had earlier, for the first 6 months. So we'll see what transpires here in the next couple of days. But today felt like, a kind of a washout day based on headlines. And also, we're heading into the weekend. Tomorrow's Friday. So this is Chris Robinson, Robinson Ag Marketing. If you're not getting my letter, robinsonagmarketing.com, take a look at it. And I will be sending that out tonight, as I always do. Have a great rest of the night. This is Chris. If you need some help, give me a call, 312-638-8868. Take care and thank you.